Okay, today we're going to take a look at CVX, and I'm just going to recreate one of the setups that I've already had. So what I'm going to start with is a daily chart. Just acknowledge the fact that on this daily time frame, it's still a pattern of lower lows and lower highs. Price is below the 200, and it just kissed the 50 simple moving average today. And let's check the symmetry of this market. I'm going to take the prior low to high swings, project it from the most recent low. Okay, there's 114.43. Then the other swing comes in at 115.11, and then there's a swing inside that swing, low to high from this low. That comes in, it looks like 114.55. And then let's see what else we can overlap this with. So we can look at the larger swings, where I take the prior major high to low, see if there's anything that overlaps there. Alright, let's get rid of that there. Alright, 50% not too far away of the larger swing. And then let's try a couple of these swings here. And there's also a 50% retracement of this high to this low that overlaps that area. Let's get rid of this stuff above here because we're not even close to it. And then let's also run the retracements of the more recent swings, this high to this low. Oh, there's a 618. Okay, well, you know, I already knew that because this was a trade setup that we have already looked at. And let's see, is there anything else we can really run? Let's see if there's anything different here that might overlap. Yeah, there's a 786 overlap too. So, bottom line, the setup, the area that I'm watching actually for possible failure and a resumption of the decline in CVX is this 113.91 to 114.55 area. Okay, now it wasn't a perfect hit of resistance, just a teeny bit short of it, 113.79 instead of 91, but that is close enough to start looking for a trigger. Now, if the bearish pattern is going to reassert itself, okay, you know, so this would be a completion of the same pattern, then we would be looking for a potential downside target at the 1272 extension. Now, I'm not saying that we're going to get there just because that's a target I threw on the chart, but that's typically what you do, you know, from other swings. So, you know, this low to this high extended downwards, this low to this high extended downwards, this low to this high, maybe it extends downwards, okay? Or at least gives you a pullback. But bottom line, we have resistance here, and we also have a swing that is similar in time, or actually equal. There's a prior rally swing of 8 trading days up. There's also, you know, this low to high swing is also 8 trading days up, so there's some time symmetry there as we're testing this resistance, as we're testing the moving averages. And then what else do you need? Well, the aggressive swing trade trigger, which will get stopped out a little bit more than the other, did fire off a sell right now. So if you use the aggressive trigger, then you would already be in the trade, and you can define your risk either above this high at 113.79, which is basically the high made prior to your sell trigger firing off, or above, you know, the high end of the zone. That's your choice how you want to do that. But also realize that the aggressive swing trade trigger has not fired off yet because you did not have the 834 EMA crossover to the downside here. So again, depends on, you know, which trigger you use for an entry. But what I do know is that this is resistance. This is a natural place where, you know, this decline could resume from. And, you know, you might want to take a look at it. You might get some money out of it. And at least the risk definition, or, you know, the risk is defined. Okay, hope that helps.